One of the most important on-chain metrics in crypto just broke its all-time high from years ago. In today's video, I'm going to go through what that metric is, how to track it, and what it might mean for the market. Welcome back to Dynamo DeFi. My name is Patrick, and nothing I say in this video is financial advice. This is solely intended to be used for educational purposes. Now let's get into it. The metric I'm talking about today that hit a new all-time high is the total stablecoins on chain. That's total stablecoin market cap, so it's the sum of the market caps of USDT, USDC, DAI, etc. All those stablecoins. This is the total of all of them, and notably, this is excluding algorithmic stablecoins like UST's Terra. For people who were not around 2 years ago, algorithmic stablecoins are not really backed by anything. They're supposedly keep their peg with an algorithm, but it doesn't usually work out, and so UST, the most famous one, went to zero. So we are excluding those because these stablecoins we're talking about today are fully backed. They're backed either by dollars, they're backed by dollar equivalents like short-term treasury bills, or they're backed by crypto, or sometimes they're backed by other real-world assets such as real estate, although that's less common than the other things. And so why does this matter? Why does it matter that this hit a new all-time high? Because total stablecoins market cap could be thought of as a proxy for liquidity in the crypto markets, and it could be thought of as a proxy for real, and I'll put real in quotes, real money in the crypto markets, because the vast majority of this is backed by dollars or dollar equivalents, right? It's USDT, it's USDC, it's others. There's money in a bank account or in treasury bills somewhere that is actually backing up this money, and people have chosen to take this money and they've put it into crypto. And some of that money is in crypto to buy things like Bitcoin, so it's on an exchange somewhere. Some of it is in liquidity pools in DeFi. Some of it is being lent out through either centralized exchanges or through DeFi. Some of it's just being held to use for payments. It's a common use of crypto, especially USDT in parts of the world like Argentina. But the point is that this is real money in crypto. So when total stablecoins are going up, it means that more money is entering the crypto market. And if we look here, we can see that the peak from 2022 was between 167 and 168 billion dollars. And it was, I believe it happened in March 2022. And we look here, it was after that, it was decreasing for a year and a half, pretty much, right? It was just bleeding out, finally stabilized last August, September, started to climb again, and then really started to ramp up this year in February and March. And if we look at the Bitcoin price, we can see that although it's not a perfect correlation, we can see that Bitcoin price was also bleeding out. It hit its low point after FTX, of course. But here, notice in September, October, that's also when Bitcoin started to go. And I remember at the time, because I had posted about it, was you could have noticed that stablecoins had stayed flat for several weeks for the first time in years, in literally years, before Bitcoin moved. And then again, we know what happened this year, where we had, depending on who you ask, either the start of the bull run or some sort of mini bull run, which I personally think that we're going to have a larger bull run later. And part of the reason is that you have money flowing into the market still, right? You have Bitcoin ETF inflows are still positive, which means that new money is flowing into crypto that way by buying Bitcoin in the ETFs, and then you've got new money flowing into crypto through stablecoins. And although there has been some inflation since 2022, note that the M2 money supply has actually decreased since then. This is from the St. Louis Federal Reserve website. That peaked in April 2022, and now it's starting to rise again. But note that, interestingly, that's around the same time liquidity peaked in crypto. Maybe not a coincidence, but note that liquidity is now in crypto is at an all-time high, and so that's a phenomenal sign. And if you look at the coins that the growth has come from, Tether in terms of absolute dollar value is leading the way, up 3%, and it's also the largest with over $100 billion. Tether is the largest stablecoin, and Although some have tried in the past, some have even come close at times, Tether has pretty firmly established its dominance at this point. You have USDC, you have DAI, that's MakerDAO's stablecoin, is still growing. But then if you look at the ones that are really growing fast, you have First Digital USD, up 70% in the past month. And then you have PayPal USD, up over 70% in the past month. And we've been talking about PayPal USD on this channel because there's really good incentives right now to use it on Solana. And then as we go down, there's some smaller stablecoins like Usual USD, Go, that's Aave's stablecoin, and USD Plus that are smaller and growing. But I think the big stories here are First Digital USD, PayPal USD, and Tether are really leading the growth. By the way, if you want to learn more about how to do this sort of on-chain metric analysis, every week in my newsletter, dynamodefi.substack.com, I send out the most interesting on-chain metric that I saw that week, along with other things like readings and token unlocks. And also for premium subscribers, I have an on-chain academy, which is a over 3-hour video series teaching you how to do this sort of research yourself. Again, that's dynamodefi.substack.com. And so what does this mean for the entire market? Well, one way to think about stablecoin inflows is almost like a stimulus injection to the world of crypto. It's new money flowing in. And typically where that money flows first is going to be to Bitcoin. Historically, every single bull run starts with Bitcoin moving. Bitcoin moves, that's new money in the market, and that often attracts attention because Bitcoin is the coin by far with the most name recognition. People hear about Bitcoin moving. And then people who missed that initial move, they say, hey, I missed Bitcoin. I want to go to the next best thing. And they will try to buy something a little bit smaller. So they might buy some Ethereum, Solana, some other coins that are, say, in the top 10, top 20. Or people who bought Bitcoin, they start to take profits, and they take profits into some riskier tokens to try to bring their gains up even further. So generally that's how bull runs start, right? Starts with Bitcoin, then moves on to the majors, and those majors could be, again, top 20, top 10, or they could be leaders in certain categories. So you could have, for example, the top RWA token, real world asset. You could have the top AI token, top DeFi token. Things like that. The narratives that are going to be hot, the leaders start to move first. And so that starts to play out. Those tokens go up. And then what happens after that is same thing. People who made gains in those start to, some of them move further down the risk curve, although that's probably the time you should be starting to take some profits. Or people who missed those coins say, okay, I'm going to go for the next best thing, or in that case, the third best thing. And so they go, they're going way down. Out of the top 100, they're going for the micro caps. Recently, a lot of people have been going for meme coins, although we don't generally cover those on this channel. They're no longer going for the leaders in the narrative, right? Like Ondo is probably the top real world asset token. Maybe they're going for the second, third, fourth largest RWA token. And they're basically trying to play catch up. But before any of that can happen, what you have to watch for is to see, does this stablecoin market cap keep increasing? And does this translate to the growth in Bitcoin? And perhaps more appropriately, I would say, when does it translate to the growth in Bitcoin? Because if this keeps increasing indefinitely, eventually that money is going to find its way to the rest of the crypto market. It's just a matter of when, right? You can see here, for example, last year, it really started to bottom in August. And although the market had already recovered from its low after FTX, it really wasn't until October that things started to take off. And that was related to the ETF news. But note that whatever the news that made it take off, you still had that liquidity growth preceding the actual price increase. That's all for today. If you want to see more videos like this, be sure to like and subscribe. And until next time, this is Dynamo DeFi.